2026 is shaping up to be one of the more unique housing markets we've seen in a while. A lot of factors converging now to make that so. Interest rates, as you probably know, are down. There's a growing inventory of homes for sale. Sellers are offering credits to buyers, and buyers are sensing a good bit of leverage again. On that, stick around. We've got something that should save you about $1,000 using that leverage. Now, most home buyers, they don't know how to use market conditions to their advantage, but we do. And that's the difference sometimes between being priced out and getting a loan with a lower monthly payment than going rate would allow. Our smart affordability strategies turn this moment into opportunity for our buyers. All right, let's take a look at a real example. This was a $400,000 house. Now, this buyer, they thought they were priced out of the market, priced out of this house at least, until we analyzed and then restructured their loan in a way that their previous lender had not. With a reasonable credit, and we're talking about 2%, less than 2% of the purchase price, which sellers are usually very willing to give, we lowered their payment by $300 every single month. $300, that's significant savings and a more cost-efficient loan for the buyer without changing the purchase price at all. So as you can probably guess, seller credits are the most impactful way to make a home more affordable, much more than a price reduction on the house. Using a 3.5% down payment, reducing the purchase price by $10,000 saves you $350 out of pocket at closing and about $60 per month. But getting that $10,000 back as a credit, as you just saw, saves you $300 every single month. These credits paid for by the seller, they can be used to cover closing costs if you'd like, but our focus is using them to fund interest rate buy downs. Those, of course, lower your monthly payments over the course of your entire loan. Another myth, you need perfect credit, like 800 plus. In reality, many buyers qualify for loans with scores in the mid 600s or even lower. Yes, improvements in credit score will lower your interest rate or can lower your interest rate, but 780 or 800, that credit score is just not required. With the right loan and a smart plan, even average credit can get you approved and save you money. Now, a word that you've heard a lot lately, affordability. When it comes to a monthly payment, there are really three elements that shape your monthly payment and whether it's affordable. Your interest rate, of course, is important. The credits you get will help that interest rate. And there's an added cost with a low down payment. Mortgage insurance will work with you on that. Now, most buyers and lenders focus mostly on the interest rate, but smart buyers and smart loan officers know how to balance all three of these elements. It's kind of like solving a puzzle, and we always find the best fit for you. Most shoppers don't have a firm understanding of their buying power. It's been our experience, though, that a monthly payment for which you can be approved is likely higher than you'd expect, especially when you involve seller credits. For example, in many South Florida neighborhoods, let's say a $500,000 home, if the loan is structured correctly, is about $3,850 a month all in. That includes taxes, insurance, HOA fees if you have them. We work within your budget regardless of what price range you're shopping in. In 2026, buyers have more options than ever for a home loan. There's FHA loans, conventional, VA loans for those in the military, USDA, jumbo programs for self-employed. You have adjustable rates, investment property loans, anything you could think of. And no matter your income type or your financial situation, there's almost always a path forward to get you into a new home.